Most traders get annihilated in New York because they think more screen time equals more money. I don't trade New York like that. I wait for this one candle to close, follow a fixed set of rules, and then walk away. This one candle tells me when to trade and lets price confirm direction instead of me gambling or guessing. There's no prediction, no daily bias, and no staring at the charts all day nonsense. And by the end of this video, you have these exact same set of rules, so you can trade New York session in under 5 minutes a day. And this system is known as my New York continuation model. And the goals for this video is to show you why the New York continuation works without prediction, break down the one candle rule that's going to filter out bad trades, explain how the London highs and lows frame the New York direction, and within this system we're not going to be utilizing any smart money concepts, indicators, and limiting our screen time to only 5 minutes a day, giving you a fully rules-based model that you can repeat on the daily. And of course our trading day is going to be under 5 minutes. And now that we have our candle here, this candle is going to be the 12 a.m. candle on the NAS 100. And step number 1 is to show up at your desk at 6 a.m. EST. So for you 9-to-5ers out there, maybe you just have to wake up a little earlier, place your trades, and then head off to work. No big deal at all. And then once we have this candle, we're going to be marking the highs and lows of the candle and then placing our orders. And as far as the orders we're placing, it is going to be based off the highs and lows of this candle. And once we have that 12 a.m. candle marked out on our screen, we need to identify the high and the low. And now that we have our high and low, all we're going to do is place a long position at the high and a short position at the sell. And in the direction of buys, if price is to break the high within the next candle, we are going to take a long, and if price decides to run the low, we are going to take sells. It is that simple. And the idea here is that we're capitalizing off the New York session, catching the continuation in either direction, utilizing the London highs and lows. As this candle here is going to close at 6 a.m. EST, so we're taking the next 6-hour candles data, which is from 6 a.m. to 12 p.m., which also contains the hours of the New York kill zone, which is the most volatile session in New York, and we're catching the volatile price action of New York. And you might be asking how we're actually going to manage the position within this system, and we're going to be utilizing what's known as the 3-candle rule, where as soon as we're entered, and in this case it's the case of buys, we're closing our trade on the third 6-hour candle. So when price closes at this level here, we are closing the position. So whether it closes at 2R, 3R, even at a negative profit factor, we are closing the trade no matter what. And the idea here is that New York is entering us and setting the tone for the next few candles to come, and that is where we're closing our positions. And for the case of sells, it is going to be the same thing but inverse. If we were to run the low within the next New York candle, we are closing our trade at this third candle here. So again, whether it's at 3R, 4R, even a negative profit factor, we are closing the position. So all we are doing is setting our positions at the highs and the lows and closing our position if it's not reached within the next 6-hour candle, and we're walking away for the day. As far as the data goes for this system, at the third candle R, we are averaging about 0.23 R per trade, which for every $1,000 risked, it is $230 profit. So for example, if you take 20 trades for the month, you are going to be averaging $4,000 to $5,000 a month. And of course, this could look like one month you making 10 to 15K, the next month you might be down 2 or 3K, and maybe the next month you're break even. You guys get the idea. It's an average. And as long as we're getting the volume of trades, which is going to be about a trade every day, eventually the stats will even out to about 0.23 R per trade, which again, if you're risking $1,000 per trade, is going to be about $230 profit per trade. And now that you guys have a basic understanding of how this system works and how simple it is, we're going to dive into a few live examples so you guys can be on your way to mastering this one candle New York continuation model. And now that we have NAS 100 on our charts, of course we need to wait for the 12 a.m. candle, and right now this is the 12 p.m. candle, so we're going to let 2 more candles play out. And now that we have our 12 a.m. candle, all we need to do is set our orders at the highs and lows and let price do the rest. So as you can see, this first candle tapped us in here. So this would have put us in the direction of shorts. So we'll go ahead and place an order at the high and low of the candle in the short direction. And so far we have this first candle, which again is going to be this New York candle. And as you can see, very volatile price action, which is what we love to see. And ideally we see these next 2 candles continue in the direction of shorts. If not, no big deal. Okay, as you can see, there was a little bit of a pullback, but we ended up with a total of 2.29R. So we'll go ahead and denote that on screen here, 2.29. And of course, we would have went ahead and closed this position. So we'll go ahead and do that. And now that we have our next 6-hour candle, which is the 12 a.m. candle, again, you're placing orders at both the high and low of the candle at 6 a.m. And as you can see, this next candle taps us in beautifully, which would have been in the direction of shorts, given your entry at the low of the 6-hour candle, followed by stop loss at the high of the 6-hour candle. This first candle gave us about 2.6R, but we're not managing at the first candle. The data has shown that managing at the 3 candles is going to be the most profitable in the long run. And of course, I let the data make the decisions for me, not my emotions. So we're gonna let these next 2 candles play out. And as you guys can see, we totaled about 3.83R. So we'll go ahead and denote that on screen. 3.83. And we'll go ahead and close this position as you would have done in live time, and we'll look for our next 12 a.m. candle to place a trade. And we have our next 12 a.m. candle, and keep in mind this candle opens at 12 a.m. and closes at 6 a.m. and that is when you're actually going to show up to your desk, place your orders, and go on your merry way. And now that we have the candle, again, we're going to be placing trades at the high and the low of this London candle. All right, another trade in the direction of shorts. Again, price is confirming the direction, so there's no stress about predicting the direction or daily bias or any of that nonsense. We're simply just following data-backed rules. So this first New York candle tapped us in. We'll let these next 2 candles play out. And it looks like we totaled about 0.89R, which is still pretty solid, plus 0.89 at this candle here. And we'll close this position. And we'll continue to take a few more trades. And now that we have our next 12 a.m. candle, we'll let price confirm our direction. And let's see, let's go ahead and take a look here. So it looks like, yeah, so price grabbed the high and then continued in the direction of sells. So yes, this would have tagged us in for a buy and then stopped us out at the low here, which would simply just be a -1 for the system, which is simply going to be a -1 for the system, which is no worries at all. All we need to do is just keep showing up and applying the system, understanding it has long-term profitability. So we're not stressing about the -1s. And now that we have our next 12 a.m. candle, we'll just let price do the talking. And as you can see, again, we grabbed the low and then decided to run the high. So that is just going to be another -1 for the system. And now that we have our next 12 a.m. candle, again, you're setting orders at the highs and lows. And it's also important to note that if the low gets grabbed first, you are closing the buy, or if the buy gets grabbed first, you are closing the sell. Okay, we have this New York candle that taps us in with very aggressive price action, which is perfect. Love to see it. So this would have been a long position with entry at the high of that 6-hour candle, followed by a stop loss at the low. And this first candle is giving us about 2.5R. So we'll let these next 2 candles play out. And it looks like we finished with a sum of about 3.83R. So we'll go ahead and document that at the bottom here. And we'll close the position. And these 6 trades we took here was within about a week of price action, so you're getting about a trade every day. And if we total the sums for all the RRs of the trades we took, we have a plus 2.29R, plus 3.83, plus 0.89, plus -1, and another -1, followed by another plus 3.83R, totaling about 8.84R. Which again, if you're risking $1,000 per trade, that's going to be about 8.8K in just 1 week, which is absolutely fantastic. But again, you have to look at your P&Ls on a month-to-month, on a year-to-year basis. For example, in the month of January, this system might perform very well, and we might make 20K for the month. The next month we could lose 5K. The next month we could break even. It all comes down to your month-to-month and your year-to-year basis. And of course, it comes down to dialing your risk management, scaling your account, being able to withdraw your profits in the long run. And that is exactly what I teach my students. And I do have exciting news, and that is that my one-on-one mentorship is now live. And if you guys need help applying these one candle systems and actually being able to scale your account and withdraw on a month-to-month basis, go ahead and click the link down below and apply. But besides that, pretty much wraps up this video. I'll see you guys in the next one.